what you have to do is read the intentions of the players. Read the intentions of the players and understand what they are trying to do it in the market. They do it purposely. And just from the morning, from that of the Japanese session, you would have noticed that there's going to be news from that of BOJ. So Bank of Japan was expected to announce certain parameters. So in such a situation, what happened? The players made wild either way moves in Japanese yen, USD yen. What they did, they made a quick dip before that of the announcement. Then after the announcement, they quickly raised it to 102.78. Then everybody thought that, okay, fundamental is driving, and because of that, Japanese yen has become weaker, USD yen has become stronger, or denominator yen has become weak, thereby the level is going up. Then if they think that, okay, it is going to continue to rise and take the buy position, what happens? They started making the slide. This is what they do is, they create the market sentiment and act against that of the traders pending position. So the sentiments are created by using the data. So from time to time in a week, you come across various types of data being released. And before the data, they will simply give the story that everybody is waiting for FOMC to come out. Everybody is waiting for BOJ outcome. So they continue to create the stories of the nature so that they are able to sell their product. And in that process, what happens? After the BOJ, if somebody is thinking that he can take a trade, then it has gone either side. So what sort of trade I would have done in that process? When they make a dip, we assumed that they will make for the dip and waited carefully. And after the data release, it went up, thought that I can do a breakout trade and take a buy, it drops. Then the trader becomes fatigued. There's no point in waiting for the data release to happen. Instead, I should position myself beforehand. But beforehand, the talk in the market is so uncertain, and everybody say that it is going to be other way. So you don't freely take a buy position when Japanese yen, USD yen was making a downward move, because the comments in the market were really discouraging you taking the position. So you find the uncertainty prevails in the mind from time to time in different forms. So every day you come across people talk about non-farm payroll, BOE interest rate decision, the ECB interest rate decision or easing out and things like that, FOMC interest rate decision or as a statement. And you find every day during the European and US session or a Japanese session, there will be a data release and there will be uncertainty. Besides, you do come across suddenly the speaks by various finance ministers. And when the finance ministers talk, immediately the players make the very big drop or the very big gain in the market. As if something miraculous happened in the world. So when BOE governor speaks, immediately they will drop. When Fed chairman speaks, immediately they gain the level. How it is possible? So if the market can go up and come down like that, these finance ministers can continue to talk alternatively. Thereby the economic productivity will go up. The markets all will boom like anything. There is no real productivity needed in the country. There is no GDP growth needed in the country. And so they just create the hype out of such stocks. They say that, okay, when they are having such mindset, and automatically they will be doing good for the market. That is how people assume. And the players are so clever, and during such talks that simply say that so-and-so is dovish, so-and-so is hawkish. And you know that the hawkish and the dovish are the normal behavioral strategies. And they use such terminologies in forex market and also other markets and say that he is dovish because of that US dollar is weakened, or so and so he is hawkish because of that US dollar is strengthened. So they simply give such attributes and make big moves on the upside or the downside. So when they make such moves, we need to identify whether it is a true move or a false move. As I told you, when they gained quickly the levels in the case of USDM, is it going to be a true move on the upside or they are going to reverse that? We need to identify. For that, the types of moves they are doing it in the market are vital. So if you identify the type of moves, what they are doing it in the market correctly, then you will be able to take appropriate trading decisions. There won't be any uncertainty for you. What you do is, these are all the types of moves. I'll explain it now. There are certain moves that happens in less than 30 minutes during early and the late sessions or during gap time, what I explained it with the help of the time frame. A stop and is a move which happens for about 15 to 25 pips above that of the initial high or below that of the initial low in less than 30 minutes during the early or the late sessions. So times are all fixed. We need not expect during that mid session. A false move is the one which happens in less than 30 minutes and they come from that of the high up to that of the low without breaching the low, come up to that of the high quickly and rise above that of the high and go continuously upward. And that is a false move. So they had done it in the case of Japanese yen. They just made a false dip before that of the BOJ decision. And then subsequently they made upward move and stopped cutting the new high for 30 minutes and started making the slide. So every 30 minutes you find that direction of the trend changes. So if with the help of the 30 minutes chart, you will not be able to find out. Only by watching into that of the live market code page and related time frame in GMT, you will be able to understand that. So a false move is the one, they come from high to low, pretend as if they are going to drop it and suddenly go higher than that of the high and stay above there for 30 minutes and continue to rise. And that is a false dip before the rise. So this, they do it before that of the data release. And today you come across the FOMC announcement. And at that time, you will come across 18 GMT. They will make a false dip and then later on gain substantially with the help of an upward spike. That is what's going to happen in the market. I'll explain in detail during part 2 of the webinar. So you find such false move happen before that of the data release. Then you come across the other type of move, namely more than 30 minutes up to 2 hours. They make a drop and go below that of the initial low. Stay there for more than 30 minutes. That means they will stay there for up to 2 hours. But they don't breach the new low every 30 minutes. That is an extended move. And up to 2 hours, they hold it below that of the initial low and then start rising it and continue to gain slowly on the upside. So that is referred as an extended move. The extended move, they do it alternating with that of the intentional move. What is that intentional move? It is a move which happens for more than 2 sessions. Up to 2 sessions and the start of the 3rd session and reverse the market. The players don't do hat trick in the market. For more than 2 sessions, they don't make similar moves. More than 2 days, they don't make similar moves. More than 2 weeks, they don't make similar moves. So they always change it. Only then the traders can develop the uncertainty. They continue to make in a similar way. Japanese session slide and European session rise and the US session slide. Everybody will know, okay, European session rise, I'll take a sell, I'll book profit during the US session drop. They can plan it. So they want the traders to plan and go wrong. Only then they lose money, they become stressful, and they start doing distress trade. And the players are able to earn continuously from that of the market. So you need to understand that they make the intentional move, which is a slow move, which happens every 30 minutes. They breach the new high and go above. Every 30 minutes, breach the new high and go above. And that is intentional move. Extended move, they breach the initial high and go above, stop cutting the new high for more than 30 minutes and hold for 2 hours near there and start reversing it. That is extended move. So what they do is they make a downward extended move for 2 hours, and then for 2 sessions they continue to gain the level. Third session, they quickly gain the level and reverse the market. This is what they do every day, every week, every month. We need to identify. So don't think that market is not manipulated. If you watch it following the time frame, you will be able to understand they alternate the extended move with the intentional move. And in between sessions, they make the early session the stop and the late session stop and during that of the gap time, they make the false move. And before that of the data release, they make the false move. And swing, they do it during the mid session. Without breaching the high or the low, they make small moves. Now they are doing the swings. They are making swings near that of the high or near that of the low or between the low and the high, just to keep the market floating. And in that market, carefully if you watch, you can find how slowly they are making the net change from negative to positive. I want you to watch the live market code page simply so that you will be able to understand that they are gaining the levels first in the case of Australian dollar, and later on they are gaining the levels in the case of euro. Now it has become unch from that of the previous day close. And in the case of GBP, it is still making about 9 pips negative net change. So all the numerators, slowly one by one, they are gaining the levels. What about the denominator? They just showed a big positive net change in the case of USDN. Now it is making only about 7 pips positive net change, which has made the slide. And they are likely to come down when euro and GBP go up further. So what the hype they created for BOJ will be simply discounted, and they will come below that of 101.50 and hold. This is what they do it. Then everybody forget about BOJ. They all talk about FOMC. So knowingly or unknowingly, the analyst also forget about what they have said during that of the BOJ interest rate decision, and they talk about FOMC, forgetting what they have said earlier. Then in that process, what happens? The sufferers are those who have taken the position following that earlier talk and later on find that the market is going against, the same analysts are talking differently now. So that is what the traders get confused. So the trading is different from that of market analysis. Trading, you need to identify who is trading against you and read their intentions with the help of the type of moves they are doing it in the market in order to trap the traders. So you avoid getting trapped is most vital. So when you study this, the type of moves they are doing it, you do come across one more move called as extended stop end, which happens during that of the monthly trend reversal time. What they do is they, from that of the high, they breach the low and drop for about 150 pips net change level and reverse the market within the session or the next session and go above that of the high and gain 150 pips. This happens during that of the data release, especially during the month end and the new month beginning time. They make such big 200, 300 pips move, and that is referred as the extended stop end or either way stop ends. So we need to identify those type of moves when they will be doing it. So on a daily basis, if you expect the extended stop in, then you will be continuously holding the market fear and you will not be able to enter into the market. So you need to identify the time frame. Nobody talks about the time frame. It's very pathetic situation. Actually, people should say that during that of the month and in the new month beginning, the players are trying to handle the derivative market, especially the futures and the options market, and also the exporters and the importers. They go in for the forward cover. In order to hit their stops, the players make big moves during that of either way moves during that of the month end and the new month beginning time. During such time, they will make either way stop ins, very volatile market. And during second, third week, and fourth week, they make only one-sided move. So if you understand that, then you will not envisage such big moves during that of the mid-month. And you will be able to trade easily. Near that of the low, you can buy and book profit. Near that of the high, and easily you can earn money. And you can do the position trade also during the mid-month, but not during the trend reversal time of month end and the new month beginning time. So they are all the higher time frame moves in the market.